How are you, everyone? My name is Mr. J.M. Kimani, your lecturer in Management Accounting. Welcome to the topic Budget and Budgetary Controls. Now, in this topic, we look at the types of budgets and especially those budgets that are prepared at the beginning of the period for a particular budget period, and also the terms and definition of budgetary terms. Now, when you talk of a budget is a financial or quantitative statement prepared and approved prior to a defined period of time of the policy to be adopted during that period, with the objective of attaining set. It is a plan of action relating to a defined period of time expressed in financial and quantitative terms. Now, we are saying that a budget is just a statement of plan. It is your intention, what you'd want to do for a particular period of time. It is that during the budget period. Like, for example, if you are budgeting for 2017, then of course that 2017 is a budget period, and the intention is going to be expressed in a quantitative term or financial term, showing how many units, what cost, what income that you expect to receive by the end of that time. And tools for cost control purposes, in that financial information of the coming years can be predicted and financial priorities developed for their implementation. Therefore, items or policies outside the budgets will not be incorporated during implementation, as they are not part of priorities set. Budgetary control is a technique adopted in planning where budgets are used to set priorities and implement them for the purpose of controlling activities. It is a technique used for control, since budgets act as a guide of what is expected during the coming year. Now, the point is that these budgets, we are saying that as you are putting your intention for that period, it is what that you have expressly indicated in that budget that is going to be controlled. Therefore, being a controlling technique or a controlling tool, then of course is only going to control those items that are in the budget, those costs, those incomes, those quantities that are in the budget. But anything outside the budget shall not be part and parcel and shall not be controlled. In any case, it is very hard for you to control what you never planned. And that's why you normally plan first, so that now we can be able to use that plan for control purposes. That when you start implementing, when you start executing the budget, you're able to counter-check whether what we are doing is as per what we had laid down as our plan. And that is why a budget is a controlling tool. Objectives or the advantages of budgets. 1. To communicate ideas and plans. This is a way for managers to give orders to subordinates, or it is a two-way dialogue for exchange of ideas. 2. To coordinate activities. There is need for integration of all activities of the organization towards a common objective. 3. Motivate employees to improve their performance. Through a system of feedback and performance, employees will be motivated to attain higher performance levels. 4. Provide a basis for performance evaluation. Budgets are a basis for comparison. By comparing with actual results, performance can be evaluated for rewarding purposes. 5. Compel or force planning. Planning forces managers to look ahead. Through planning, future plans can be incorporated and implemented. 6. To establish a system of control. A budget is a standard against which actual performance is monitored. Control over actual performance is provided by comparing actual against the budget. 7. Provides a framework for assigning responsibilities. Budgets prepared have to be achieved, and responsibilities for their achievement will be assigned to a manager. 8. Ensures achievement of company's objectives. Objectives are quantified in budgets. Objectives have targets which will be achieved within the time scale of the budget. And 9. Measures of efficiency. By comparing actual with budgets, efficiency will be measured. Inefficient activities identified and the necessary action taken to improve on the inefficiencies. Now, we're saying that the objectives or the advantages of budgets as laid down, what I've just read, include to communicate ideas and plans. That's the only way. That's the only way, and actually, the mode of communication that we can tell the employees who are to execute this budget that this is our intention. We want to do this by the end of the year. So you put that intention in the budget and you now relate that information to them. So therefore, they act as a way of communication. Then number 2 is that to coordinate activities. That's true. So therefore, we would expect to have equifinality in all the departments involved. So therefore, we are going to have some coordination within the company through that budget. Also, motivate employees to improve their performance. That's true. In any case, it is when you get a feedback that you have achieved or not achieved that you get challenged, that you get motivated to ensure that you achieve. For example, like if last period you never achieved, but by just a whisk, then of course you are going to ensure this time you achieve. So there is that kind of a motivation that you derive from the budget, especially through what you call the feedback. Then providing a basis for performance evaluation. That's true because the managers, the divisions or departments shall be evaluated using the budgets that we were able to achieve, and therefore this is a good manager, this is a good department. This department did not actually achieve their budget, therefore there is something that we need to rectify or make some corrections. So that is about performance. About forcing and compelling planning, it is very true because in most cases we are lazy to actually putting down our intention. So just have it in mind, but you don't want to put it down. So coming up with a budget compels somebody to make a plan. And sometimes because of using something severally and frequently, you tend to just use it, execute it from your mind without you putting it actually in writing. So therefore, budget compels that manager or the department to ensure that they do plan. Then about establishing a system of control, it is true because that budget is going to be used against the actual, and we'll be comparing the two, see whether we are on schedule or we are not on schedule. Also, providing a framework for assigning responsibilities, very true, because as we come up with a budget, this budget shall be executed by various departments. So we have the sales department, we have the production department, we have the purchasing department, all these human resource, these departments shall be given responsibilities in a bid for us to achieve the objectives that have been set. Also, ensuring that achievement of company's objectives, very, very true, because this acts also as the responsibilities or either the objective of the company, and by achieving the budget, we have achieved the objectives of the company, and then the company will have performed well. Measures of efficiency, very true, because as we compare the actual results with the budgeted, we are going to experience some efficient activities and some inefficient activities, some efficient departments and some inefficient departments, efficient managers and inefficient managers. So therefore, we can take some corrective actions concerning those inefficient activities, and that is about the objectives or either the advantages of budgets. Then problems associated with budgets and planning problems involve the following. One, it is a costly exercise. Budgeting needs research and forecasting where substantial costs will be incurred. Number two, may create over expectation. Budgets prepared may create a risk of high expectation of the outcome. Three, budgets are based on forecast. The parameters forecasted may occur or not. Four, budgets may set unattainable targets, which may be a source of frustration and demotivation. Five, rigidity in implementation. Budgets may be implemented as proposed without considering and incorporating expected changes. Six, negative behavior implementation arises if budgets are imposed by top management, e.g., resistance to the budgets since subordinates do not own them. And number seven, it is time consuming. Preparation, feedback, analysis are time consuming, etc. Now, these are the problems of budgeting and planning. Like you have said that it is costly exercise, which is true. It is costly. It's an exercise anyway. It's a process and it involves a lot of money because you are going to do a lot of research before you put what you are intending to in the budget. So you have to do actually research. Therefore, it's involved a lot of cost. Also, may create over expectation, and very true, because sometimes when you are preparing and when you're writing down your intention, you may actually be so optimistic and so over expectant, and therefore you put that in a budget. So it becomes so high to achieve, and at the end of the day, it can even demoralize you, as one of the points that I've given about demoralizing the employees and those who are to execute the budget. Also, being based on forecast, it's very true, because we are actually basing this budget with what we want to do. We have not done it already. It's a forecast. So that forecast may or may not be achieved. That expected condition under which you're going to do the production or sale may or may not be realized. And therefore that becomes a bottleneck or either a problem in budgeting. Then we have also talked about rigidity in implementation. That's true. Sometimes you can just implement that budget mechanically without changes, because in any case, when you're preparing the budget, there are some conditions which may change the time you come to implement the budget. You cannot just implement the budget the way it is and the conditions actually have changed. So sometimes you have to actually look at the conditions involved. At that time you are implementing the budget, change the way to implement the budget so that it can go along with the actual conditions at that time. But when you implement the budget the way you set, it doesn't matter, the conditions have changed. The situation, the technology, and all that has changed. Then that means you are implementing the budget mechanically. About the negative behavior implication arises if budgets are imposed. Sometimes it can be a top-down thing. The top management can come up with a budget, then they give the implementers, and in that case, the implementers, who are now the employees and the managers, they may feel that they are being imposed on, and therefore they may want even to suppress these exercise, and in a way would expect some resistance from them. Also about time consuming, very true, because we may also expect that this would involve a lot of time. Even before you come up with a budget, it involves a lot of time. For example, if you want to come up with a budget for the year 2018, then the time, like maybe from the September up to December, is the time that you need to prepare the budget for that year 2018. You are preparing that budget in the previous year 2017, in the month of, let's say, August or September up to the month of December, to ensure that you have a budget complete by the end of that year and at the beginning of the budget year. That is about the problems. Then we have preparation of budgets. Preparation of budgets. Now, in preparation of budgets, the management should do the following. 1, set plans. 2, set budget period. 3, budget manual. 4, budget committee. 5, budget officer. 6, principal budget factor, and others. So we have looked at the introduction. We have looked at the advantages or the objectives. We have looked at the problems. Now we are looking at the preparation of budgets. Now, in the preparation, we have said that there are items like set plans, items like set budget period. We have budget manual. We have budget committee. We have budget officer. We have the principal budget factor. Now, these items, the management should prepare in advance, or either should have them as we come up with the budget. So talking of the set plans as one of the items expected to be done by the management, this involves establishment of objectives, formulation, evaluation of policies and strategies to achieve given plans. Plans should then be incorporated in the budget. That's true. So you're saying that you must actually set what you want, the objectives. You formulate all this that you expect, the evaluation of what you can do, your policies, what you're up to, what you are as a company. So all these now they're going to be used to actually coming up with targets or plans for that period. So because actually the plans define you, and therefore we would expect your policies and objectives to be used to set the plans, because these plans can only be applicable to that company setting that budget, but not be applicable to another company. That is a position. Then also setting the budget period, very important, that this is the period in which the budget is prepared and used. The period can further be subdivided into smaller control periods depending on objectives of the budget. So e.g., a budget period of 1 year subdivided into quarters. That's true. Well, we can talk of a budget period which is 1 year. But again, because you would want to make some controls, because you don't want just to stay for a whole year and then you come to compare what you have done for a whole year. And should we have done something wrong, we cannot be able to control it. Already the year will have passed. So sometimes we may want to divide this budget period into small controllable periods like quarters. So a quarter of a year is 3 months. So after every 3 months. So that means, should we come up with a budget for 2018? We can want to know up to, let's say, 1st of April. That means after 3 months. We would want to have a feedback. What have we done for those 3 months? We compare now the budget, what was our expectation, and the actual that we have achieved for those 3 months. It is that feedback that you are going to use to now check on the remaining part of the budget, which is now 9 months. So that now, if actually we are not going to achieve, there's no need of us waiting for the whole year again. So we can maybe make some rectification under that period. So we can control, or we can divide this budget period over what we call the controllable periods. We can also have, we have the budget manual, the next item, that this is a document of instructions, responsibilities, governing persons, preparing budgets, and the procedures, forms, and records relating to the preparation and use of budgetary data. It is a guide on budget preparation processes. And that is the most important thing, that it is a guide. It's a manual. The way you can get a manual for a particular machine, you want to know how to operate a machine. So maybe like if it's a mobile phone, if it's a calculator, how do you operate that calculator? So that manual you get, the same story here. We have a manual for this preparation of budget. It's a guidance on how the budget should be prepared. And therefore, it has the following contents. 1. Objectives of the budgetary planning and control. Objectives of various stages of budgetary processes. Organizational chart shows how organizations is managed. List of individuals holding budget responsibilities. Types of budgets and their interrelationship. Sequence in which budgets are to be prepared. Budget timetable. Membership of a budget committee. Specimen reports, specimen forms, and instructions of the completion, and then charts of accounts. So looking at those contents of the budget manual shows you clearly that it's a procedure, a guideline on how a budget is to be prepared. Talking of even the list of people who are having responsibilities. We can have the departmental managers being the members of this process, because they're the ones who will bring their individual departments' targets or budgets, which we're going to incorporate as a committee and now have a budget for the whole company. Talking of the timetable, that's true. We need to have timetable because every item has its own time, and we require to indicate correctly this timing so that they can be incorporated in the budget, so that we can be knowing if it is a sales, if it is income, if it is purchases. So when do we expect this to flow, or to flow in or flow out? That's what is expected. About the chart of the organization, who is who in this organization, the departments which are responsible, which are answerable, we want to know that situation. About sequence in which budgets are to be prepared, very important. So we want to know after this, the next budget, or which budget feeds which budget. So we want to know that relationship about the budget. So those, among others, are the contents of a budget manual. And when you have it, of course, now we can have anyone sitting in that committee being able to undertake that process of coming up with a budget. Then the budget committee. This is the coordinating body in preparation and administration of budgets. Coordination and administration of budgets is the responsibility of budget committee and their functions. Examples: 1. Coordination of budget preparation. 2. Issue of budget preparation timetable. 3. Allocation of responsibilities in budget preparation. 4. Provision of information to assist preparation of budgets. 5. Communication of final budgets to appropriate managers. 6. Comparison of actual with budgets and investigation of variances. And 7. Continuous assessment of budgets and planning processes in order to improve the planning and control function. Now remember, this budget committee is addressing the human factor in the budget, because most of things that are going to be expected should come from these people, should be facilitated by this committee. Now this committee of people who are concerned with the preparation of budget will have to share responsibilities, because we can't just have membership without responsibilities. So we have departmental managers who are going to bring their individual expectations in that committee, so that now we can coordinate and have a budget for the whole company. Talking of coordinating the process of preparation, talking of the coming up with a timetable, which is very true because we want to know what time we should be doing what and what time we should be completed to do what. That is something to note. Also providing information, because they have their own individual information concerning the individual departments and their expectations. Communication, very important also. This brings coordination, of course, within the committee about the budgets. About comparison, actual and expectation, they are supposed to do some investigation. Like if you are preparing a budget for the coming year and we already have the budget of the previous year, we can check what may have happened that we were not able to achieve the budget, or what happened that we were able to achieve the budget very early, like by the end of the third quarter of the period, we were able to achieve the budget. So that tells you that either the budget was so low or the budget was so high. So that is their responsibility to ensure that as they're coming up with another budget, it should not have such kind of problems experienced. Also, assessment of the budgeting and planning process, they are supposed to do that so that they can improve. Every time we are having a process of preparing the budget, we should have a good and a smooth process, better than the previous one. So that is the human factor behind the whole of this preparation, and that is the budget committee. We have budget officer. Budget officer. This is a person who assists the budget committee in the budgeting process. He is the accountant of the organization, as he understands all the aspects relating to finances of the organization. Now, when talk of the accountant of the organization, or either the finance manager or the management accountant or the financial accountant, the point is that this is somebody who is across the board. He is in the organization. He's not in one department. He understands each and every, maybe what happens in each and every department. And like asking a production manager, asking a human resource manager, this may only know what happens in their own departments. So this is a person who understands the entire organization and even understands each and every department. So therefore, he is fit to head this committee. In fact, he's the head of the budget committee, who oversees and who controls and who coordinates this committee to ensure that we are coming up with a good with a budget. So it is a person who is responsible of the budget committee in coming up with this budget preparation, and it's because he understands well all the aspects of the organization, especially where the money matters. You can come up with a very, very good budget, but we can't be able to implement. We don't have finances. He's going to assist us in that understanding. We may want to implement, or we may want to put something in our preparation, but we do not know the aspects or the financial implication. So he's going to assist us understand that financial implication, and therefore judge whether to have it in the budget or just to exempt it from the budget. So very important person in the budget committee. We have a principal budget factor. Principal budget factor. Now, before preparation of the budget, the principal budget factor or key or limiting budget factor should be identified. This is a factor or a resource that limits the activities of the organization. Once this factor is identified, the budget can be prepared. Principal factors may include sales demand restrictions, machine capacity, availability of cash, etc. Management may not know what the limiting factor is until draft budgets have been prepared. Final budget will then be prepared or around the limiting factor. E.g., if sales demand is the limiting factor, production manager can only prepare his budget once sales budget is complete. The principal budget factor, very important, because when you're preparing a budget, which is an intention of what you are to do. That intention can only be achieved if you do have if you have the muscles, if you have the factors or either the resources required. Failure to have the required resources, that means you cannot be able to achieve your objective, which is now the plans that you have in the budget. So therefore, it is necessary for you to actually define the amount of resources and especially identify those resources which are limiting, the key factors that are going to limit your budget, that is going to limit the achievement of your budget, and that is actually determining the muscles the company has in achieving what it has set as the budget. It's going to be futile for you to actually set a budget which is so high in terms of production and sale, and it becomes a problem for the machine involved is not enough, is not sufficient to meet that target. The sales, the customers we have are not enough to meet our demand of our products. So it is necessary for us to prepare and identify this in advance. That now all of us, we can agree. And no wonder we are having the budget committee, which is a combination of all the managers across the company. So that now every manager can identify his limitation. And that limitation may affect the other department in achieving its objectives. So when we have that committee and we're able to identify, everybody manager is able to list the challenges he has, then we are able to know exactly what budget that is achievable and what is not achievable. And that is something important. You don't want to do useless budget that can never be achieved always. It's not good to have such kind of situation that always you are not able to meet your budget. Even next year, again, you can't be able to achieve your budget. It's good to actually explain and evaluate yourself, know what you can afford and what you cannot afford. Now, we have the responsibilities of preparing these budgets, so that at least we can know who is responsible for what. So responsibility of budget preparation. The initial responsibility for budget preparation will normally be on the managers. However, they may delegate to their subordinates. Each function involves preparation of individual budgets. These are the functional or departmental budgets. For example, a budget of income and expenditure, which actually is applicable to a particular department. Now, the functional budgets are as follows, which has the responsibility of managers. So let's have here. So we have, let's say, first of types of budgets. So starting with the functional. Budgets. So we do have examples like the sales budget. We have the production budget. We have the material usage budget. We have the material purchases budget. We have the direct labor budget. We have the production overhead budget. We have the admin or administration, selling and distribution overhead budget. We have the cash budget, such that these functional budgets, they show the responsibilities. Who is responsible? For example, like a sales budget, we expect the sales manager to be responsible here. We expect the production manager to be responsible in these two, the production and the material usage budget. This is the production manager. We expect the purchasing manager to be responsible with the material purchases budget. We expect the human resource together with the production department or manager to be responsible on the labor. So to know the labor available and labor required. Production overhead budget, also we expect the production manager to be responsible there. Admin and selling and distribution expenditure or overhead, we expect also to have the administration to have a budget of what they are going to spend, together with the sales manager responsible also because of the selling of what we are producing. This is the cost of these sales. This is a units, but to sell them, we need this cost. So you need that manager to also give us a budget of what he expects to incur. Cash budget, also we expect the finance manager, the accountants to be responsible with the cash, to know the cash flow of the company, so that we do not have a case where we are not able to meet our expenditure, especially the short-term expenses or expenditure. We need to have some enough cash to meet such expenses. So these functional budgets, they show the specific responsibilities to those specific managers, and that is very important. Then after the functional, we have what we call the master budgets. So master budget involve preparation of financial statements, which involve the income statement, and we have the balance sheet. That the income statement represent the statement of financial performance, because we want to know what it will be the performance expected in the coming year. This is what I mean the profit or loss. The profit or loss is a statement of income and expenses. And we can have it within the departments, or we can have it within the whole company, so that you can know what profit or expenditure we expect to make or to incur in that year. The balance sheet represents the statement of financial position, about where we should be as at the end of that year in terms of capital, in terms of assets, like that. Therefore, this actually is what we call the master budget. And you'll realize that to come up with the master budget, we actually require these functional budgets. We cannot do the master budget without the functional budgets. Then, number 3, talk over the fixed or original or static budget. Now, these are budgets which are prepared at the beginning of the budget period to be used for the entire year. Once the budget are prepared, we don't rectify, we don't change the budget. The budget remains that. The budget remains as set without rectifying it. So that now, even if we produce more or less, we'll just compare what we expected and what we have done. It doesn't matter the difference, whether it is a positive or negative difference. So the budget, once prepared and when executed, it is not achieved or achieved, that's not the issue. So the budget remains constant, and it is as it was prepared at the beginning. Then you have number 4 as the flexed, or what you call the flexible budget. Now, a flexed budget is a budget that is actually derived from the fixed budget, but for the volume achieved. The actual volume is the basis for this flexed budget. If this original budget is for like 10,000 units, and what we produced was only 8,000, then we flex that original budget of 10,000 to be a budget of 8,000 units. So it's the same budget, only that the volume differs. this is for 10,000, this is for 8,000, or the opposite. So that tells you that is a budget that is prepared with respect to the actual volume performance achieved. Then you have others like number 5. We have what we call zero-based budgeting, ZBB. We have activity-based budgeting, ABB. And you have the rolling budgets. Now, just a snap of what is expected. When it comes to zero-based budgeting, we expect those budgets which are prepared from the beginning without reference of what we had prepared before. So look at that later in another lesson. Activity-based budgeting is a budget of activities rather than a budget of products. It's a budget of activities. We are going to look at that later. Also, the rolling budget are budgets which actually are prepared in a manner that they are going to be transferred or rolled over to the next period. That at least we can expect what was in this year or this period can be used to form the basis of the next year or the base of the next period. That is how it is. So we are going to stop at that for this lesson. So that now our next lesson, we are going now to start preparing the budgets. So we are going to start with the functional budgets. We prepare them before we proceed with the other budgets. So that is all for now. Let's meet in lesson 2 so that we can prepare the budgets. We do some computations in lesson 2. Thank you, everyone.